One of the things I think in the future space, it seems like there may be a little bit more transparency. Currently, that may also be why like the product is a little bit more popular. And I'm a firm believer that like more transparency within the prop firm space, whether futures, whether it's CFDs, whether it's crypto, it doesn't matter. I think more transparency is always good.
I think it's not even like the first 15 minutes, but you could do the first 15 minutes or the first 30 minutes of the New York Open. You can check out the volume on that candle and you could see if it's above average or below average, and that could be very telling for the rest of the day.
Futures are cheaper and probably easier to pass because they're cheaper, so you can maybe be more aggressive on them. When you get to the funded stage, CFDs are a little bit better in terms of the payouts, because if I've got a fund account, I can basically take a payouts every month, every 2 weeks. So I think that's kind of it. It's that CFDs are more expensive, but are better when you get to the funded stage. Futures are cheaper and maybe a little bit, the payout rules are a little bit more strict compared to the CFDs. That's kind of like the baseline, I would say.
What's going on, guys? Welcome back to the Challenge Accepted podcast. And as you can see on your screen today, we have a very special guest joining us, Evan from the ASFX team, who's a trader and an educator alongside our dear co-host here, James. Today's episode is special because we're going to dive into a comparison between futures prop trading versus CFD prop trading, because we know that CFDs have been around for quite a while, but I think futures has kind of taken off over the last, year or so. There's been a tremendous rise, I think, in the number of futures traders. And I think it's a topic that's really worth exploring, is looking at the differences, not just between trading futures and CFDs, but even more so trading futures prop firms versus CFD prop firms. But before we get into the topic for today, I would love for Evan to do a little bit of an intro. So Evan, please tell the viewers a little bit about yourself and what you do.
Yeah, so like you said, I work alongside James and as well as Austin for probably about 2 years now with the streaming and then the mentorship as well. Traded for about 6 years. This is my 6th year, only the 2nd year or so trading futures, and then all before that was CFDs. So I have experience in both of them, but very heavily VWAP traded now. But pretty similar to James, I just like to work out, play golf, as well as trade whenever I can get out on the golf course. I went a couple days ago. It's that's why I think we work well together with on ASFX. Of like we all have the same personalities, same interests, same even the same drive and motivation to go after these business things. So I think it's just a good fit. But yeah, I think experience as well. James has been trading a little bit longer than me, Austin a little bit longer than him. So it's all a trickle down effect that we all teach each other, but we also all use each other to help each other as well. So really good group right now.
Yeah. 3 golfers in the room today. Once again, thank you for joining us. Thanks to James for
I've been looking forward to my tea time all week. I got a
I don't think you can classify yourself as a golfer yet, DY. You're not breaking 80 and 90s consistently.
Yeah.
I'm breaking 90s consistently, but 80 is elusive, man. Like that 15 handicap has got to go down. Like it's got to go down. It's got to become something.
When DY comes to South Africa, Evan, he says that he doesn't want to give me any. I mustn't give him any shots. He wants to play off the shoulder. So that's the work on.
I got to be playing straight up by the time I get to South Africa. So I'm working on the game hard this year.
I think I would even ask James for some strokes if I played him. I think I would ask you for 3 strokes myself. I think he's pretty close to spot.
No.
If you can just finish on the 16th hole, and then that's your score after the 16th hole.
Yeah.
All right, guys. So I want to kick off today's episode, with a little bit of I'd love to know a little bit more about your background, with trading. Off camera, we talked a little bit. You said you had some experience trading CFDs, and then you moved into futures. How long were you trading CFDs? And what kind of prompted you to move over to futures?
So, I probably traded CFDs right out of the jump from learning trading on the currency side of things. And then, like most in like the first year, probably was wasting my time in terms of like, it was my first year of trading, but I just wasn't going about it the right way. So if you don't want to count that, my 2nd year of trading is when I actually started trading CFDs with a strategy that I thought had been proven and I had rules around it. So then, okay, now it's my first year trading CFDs. And still, same thing. It wasn't even on the prop side yet. It was on my own personal capital, and then switching back to demo whenever things got ugly. Of like, okay, you don't know what you're doing yet. Let's go over to demo account because I don't want to be losing my money here. And then I think just the transition into futures was a lot of it of the CFDs getting banned in the US or the MT4, MT5 going away. It's okay, well, what are we gonna do? The prop firms, what are we gonna do? Personal accounts, what are we gonna do? So just over looking into the futures space to see if that could be an option we can go with. Because I never even know what futures is. I don't know what a contract is. I don't know what the point value and the tick value is. So it was all brand new to all of us at the time. But then once you learn it, it was fairly easy in terms of, it was a nice transition of I was trading the same strategy that I was on the CFD side of things because I was trading SPX and NAS. Now it's just ES and NQ. So the strategy was the same. So that was good. All you just had to really learn was just the terminology of contract sizing and things like that. So that was thankfully why the transition of futures was so easy, because it wasn't like a whole new realm of like, okay, now I got to learn how to trade options because I still don't know how to do that. So like that would be a big switch. But CFDs to futures was pretty fluent of like, okay, yeah, we're just really just trading contracts now instead of lot sizes. But yeah, it was probably like a year and a half ago, 2 years ago at this point, futures side of things.
And have you, like, what are the biggest differences? Because I personally have no experience trading futures. James, I don't think you've traded futures because it's not available over there in SA as of right now, right? That might change. But yeah, what are the main, what were the main differences you noticed without even, without even bringing in the prop side, right? Like you said, you traded pretty much the same strategy, but did you notice certain things working better or, working not as good? Were there subtle nuances, and what were they?
Yeah, I'd say like the instant execution of like there was really no spreads, where on a CFD you'd have to like wait a few moments before you're finally into profit. With the futures, you're right in immediately, you're right out immediately. Instant execution. The pricing is a little bit better, I guess I would say. Of like, I trust the pricing that it's the accurate pricing by the CME. That's not like the brokers making up this pricing. That is it actually? Why are we at this price? That person just called out a different price, but I don't see that on my broker over here or whatever. So I just liked how it was more so backed by the CME and all that, and as well as like the instant execution. Like I said, just no really drawdown once you're in a trade. It could be straight profit in 2 seconds.
And do you feel like there's a little bit more security, trading NQ, trading S&P, when dealing with futures?
Yeah, I think ES or NQ actually could be a little volatile depending on the trader's style and their experience with trading any of the indices in the US. That I used to be heavily solely ES trading, but then I've now traded NQ for probably about like 6 months just because I see more opportunities on there as well, and I want to be able to capitalize on them. But if you're new to trading futures or even just the indices in general, I think ES is a good option to get the cleaner, slower trend, without all maybe the craziness of an NQ wick and things like that. So to dip your feet in on ES and then maybe build up to NQ on the volatility side of things.
And as far as volatility and as far as like trading futures goes, I know that like because everything is regulated by CME, you get also the volume, right? This is something that you don't get. I know that a lot of people, I personally don't know how to do that, or like I've only pretty much traded CFDs. So like there's this like volume analysis. I see people using certain types of software. Are you using that type of volume analysis where you're looking at certain levels where the orders are? Do you use that at all in your strategy?
Yeah, I mean, I not necessarily in my strategy, but I do like pick from others. I mean, we have a guy, Zach, in our group who uses like the previous day's point of control, and I believe that's very heavily volume based. But even just like the open bar, I think it's not even like the first 15 minutes, but you could do the first 15 minutes or the first 30 minutes of the New York Open. You could check out the volume on that candle and you could see if it's above average or below average, and that could be very telling for the rest of the day. So yeah, volume is definitely a thing that I heavily track. And then even since I'm a VWAP trader, that's volume weighted average price, that I definitely need volume in my trading.
Okay. I'd love to talk a little bit more about the prop firm side of things, because I think that's where also there are a lot of big differences, right? I think from what I know, futures firms and CFD Forex prop firms almost have different rule sets. They work in quite different ways. What are some of the biggest differences that you've noticed as you've made the switch over? And actually before that, you said that you started off first trading your own personal capital. So how did you transition into prop firms and then eventually into futures prop firms?
Well, James was making all the money in Propfirms. I said, "Oh, whoa, what am I trading my own for? What am I doing this for?" He was well ahead of all of us with the prop space. I will give him that. He was like one of the first people I ever saw trading them and taking payouts from them to make it almost seem like, okay, that is an actual avenue you can take because I know this guy and he's doing it. Okay, good. So that was also like a wake up call of like, why are you trying to do your own if you have the option to not? And then even more so of like, well, I don't want to keep losing my money because I don't know necessarily how to trade yet. So let me try these prop things out. And I still would fail the first couple because again, I was still so new, but I think it was just a better, I'll spend $50 or $100 to learn the lesson rather than like $2,000 of my own account.
Yeah, blowing up
Put it
your
up
own
with
account.
another 2,000. So to learn the lessons, it was a lot cheaper.
Okay. And but what are some of the biggest differences you've personally noticed going over from the CFD to the futures prop space?
Yeah, for whatever it is, a lot of our people in our mentorship group just seem to pass the futures ones so much easier for whatever reason. Maybe it is the lower cost, I would say, in some of them on the futures one that they're more willing to take more attempts because they don't have to load up as much or invest as much capital. And so being that they get more attempts, maybe one of them is more likely to finally hit, right? They take 10 tries, they finally hit one, but no one's really maybe taking 10 CFD challenges because that could be a big investment and also take a lot of time. It might take like a year to complete. That could be part of it. And then even some of them are offering maybe just like one stage, make X amount of dollars, and then here's your account. There's no phase one, phase two. And I think the math would check out of like if you have to make 10% on a CFD, I don't even know what the percentage wise would be on a futures. It's all relative to the risk you decide to put on, right? So if you want to pass CFD one in 10 trades, divide that by however much you need to make. And then same thing on the future side. So it is equivalent, but for whatever reason, I think making 10% on a CFD one, let's say, risking $1,000 per trade, some people just honestly can't handle that P&L swing. So they're better off seeing smaller numbers because they're so new to trading and so emotionally tied to it still. That seeing the bigger numbers fluctuate, they're not going to really put on 2% per trade. So they're not going to see $2,000 fluctuate because if it loses, they're going to go off tilt and probably lose that account. Or on the futures side of things, you could use that same 2% and maybe it's like $200, $400. I honestly don't know, but it's a lot more reasonable to see those numbers as a newer trader and not get emotionally tied to it.
Why are the numbers smaller on the futures side?
Like the profit target that you have to make?
Or the profit target smaller, or what
Yes,
makes
I mean, like a 50K account, you normally have to make like $3,000 and you get like 2,000 worth of drawdown.
So that's like 6% compared to 10% or 9%, 8%, whatever. Yeah, with CFDs. But I will say what Evan's saying is very true. I think like if you buy a CFD account, right? Like let's just use this as an example. If you buy a 50K CFD account, it's going to cost you around about let's call it $300, right? In that range for a CFD account. Whereas a futures account, you're going to pay sometimes like $40, $50.
Yeah,
you know,
I could try a futures challenge 6 times for that same cost. But if I spent $300 on it, I'm going to protect it. I don't want to lose it. I don't want to go reinvest another $300. So let me take my time on this, which is a good thing. You should take your time and trade it properly. But it's just going to be a lot slower where people do feel, okay, here's $50. Try it. Didn't pass it. Here's another 50. They just keep trying almost until it sticks. And then they got to keep the account. But I think the lower cost, and then I don't even like talk to people in percentages when it comes to the futures challenges. I'm like, you have to make 3,000. You can't lose 2,000. So do that math in your head of what do you want that to look like? If you can only lose 2,000, well, if you risk 500 per trade, 4 losing trades and you're out of it. You could easily have 4 losing trades. So maybe you want to slim it back down to 8 trades and now you're only doing 200, 300 per trade, 250, whatever you want to do, right? And then to make 3,000 off of 500 per trade, you just need 6. Just things like that rather than the percentages. So it's tricky of like you get 2,000 worth of drawdown and you have to go make 3. That's really just as simply as I put it, rather than confuse everybody with percentages for this case.
You think that makes it a little bit more maybe like beginner friendly, smaller numbers, smaller targets, dollar amounts and not percentages? Because, ideally, I think if you're a more seasoned trader, you should be able to handle just like percent, like that shouldn't matter the size
almost, right? The percentage.
You should be able to.
You should be thinking about your gains in terms of percentage.
For sure. You should be able to, but I think just for the first person trying to pass their first challenge or even take their first challenge, it is not that daunting of like, oh, I just need to make $3,000 and there's no time limit on it either. So I can make $500 this week and nothing the next week and then another 1,000. Like it can be all less daunting to get into it because it's only $50 and then I could just stack wins slowly but surely, and I just can't lose 2,000. Well, if I'm risking 200 per trade, it's going to take a while for me to lose 2,000. So let me just keep stacking these $200 wins until I get to 3,000, and then maybe they'll full port one and heavy risk on one trade to try to get it over the line.
What is full port? I hear the only futures trading guy say this full port. Like, what is full porting? Like, I keep hearing this, but I don't know what it
Or it'd be like if I'll just put like $2,000 on the trade to try to pass it. I'm full port. I'm full in. You know.
Oh, okay.
If I have to make 9,000 for like 150K account, I've stacked my way up to like $6,000. Well, rather than like stacking my way to that final $3,000, I'm just gonna put the 3 on this next trade, and then you pass it. You just full port.
Gotcha. Okay, full
port.
All in. I'll just say all in. I'm all in.
Like a different way of saying
All in.
it.
Yeah, I'm all in.
Yeah, just
It's
going
either
all
winning
in.
and I'm passing, or I'm failing.
Okay, cool. I like that. I did have I did have some confusion. I was looking at some of the futures plans, and I know that there a lot of people kind of like stack different accounts, and then even with some futures firms, like they allow like even internal copy trading. I see a lot of people managing multiple smaller futures accounts, whereas feel like I see that less in the CFD space. In the CFD space, sometimes people are just managing like one 100K account or one 200K account, and they maybe have one or two across different firms. Is there a reason why you seem to see a lot of people kind of stacking accounts and almost trading them individually on the future side and maybe less so on the CFD side?
Yeah, on the future side of things, I definitely do that. I like to copy trade. I try to have like 5 together at one time because I think it's beneficial just in terms of being less like greedy or in the day to day of like I'm risking 250 per trade, but really if it goes to all 4 accounts, I'll make 1,000. So I'm more likely to step off for the day after that one trade of $250 rather than risking 1,000 per trade on each account. Again, maybe there's where the emotions come in. You put 1,000 on each trade times your 4 accounts. You're a lot more emotional than you were if you just lost 250 per account or things like that. But it also could be the cost and the ease of passing the challenges of, well, to get 5 CFD firms together or challenges accounts together, that might be like $1,000 plus to take the challenge, activate them or whatever, and then copy all of them. So with the futures, you could do like 4 together off of like, and it costs you like $50 to get that account. So you're really only in for 200 and you got 4 accounts if you never failed and things like that. But I think just it's maybe easier of like the lower cost is probably why future side of things have multiple accounts. Because some of the firms that I don't even work with, there are some that out there that are even cheaper, ridiculously cheaper. That doesn't even make sense. So they have like 20 accounts together, and it's because it costs them like almost nothing to get it.
So you see a lot of this like copy trading going on. You see a lot of people stacking accounts over at the space. What are generally the withdrawal conditions like? Because I think that's one of the biggest things that I've noticed with some futures terms, and what I've looked at is like the withdrawal. Sometimes there's like you got to make a certain amount to take a withdrawal. Are there generally limitations on withdrawals on the futures firm side?
Yeah, in terms of you can't take out more than like 50% of your account balance, right? And then you need a certain amount of days traded in between each payout, so you can't just full port it the next day and then take another payout because you made so much the next day. You have to like show consistency. Okay, you took a payout. Show us you could keep this account alive by trading still 5 more days, 10 more days, and then whatever the balance is at, here's your another payout, right? Because then it's just so easy to take a payout, leave a lot in the account balance still, and then not trade it well or not even trade it much, and then you want to take another one, but you didn't really trade consistently since that payout, right?
Gotcha. So yeah, I feel like that's one of the things that I've seen on the future side that we don't really have on the CFD side. For example, like Hydra, there's not really any limitations on like when you take your first payout. There's no consistency rule or anything like that. I would love, I'm sure James, you've looked into comparing sometimes the CFD firms. I'd love to hear from you as someone that's still more so trading on the CFD side. What are some of the biggest differences you see, and maybe what are some of the reasons that you would stay with CFDs, and then what are some of the reasons that would make you move over and try to test out futures?
I think this is basically like what it comes down to. Obviously, us South Africans are banned from trading futures, so maybe some other firms will come up and stop that. But I think it comes down to this: futures are cheaper and probably easier to pass because of they're cheaper, so you can maybe be more aggressive on them. When you get to the funded stage, CFDs are a little bit better in terms of the payouts, because if I've got a funded account, I can basically take a payouts every month, every 2 weeks. So I think that's kind of it. It's that CFDs are more expensive, but are better when you get to the funded stage. Futures are cheaper and maybe a little bit, the payout rules are a little bit more strict compared to the CFDs. That's kind of like the baseline, I would say. So as long as you got a funded account with a CFD firm, I think it makes sense for me to continue. I mean, I could take one trade and then wait for a payout and take it out the next 2 weeks, something like that. That's what I would say.
Yeah.
Can you swing trade futures? Are you allowed to swing trade on the futures?
Not with the firms. With futures, yes. With the firms, no, because they got to be closed by like 4:00 every day Eastern.
Okay, so there's no swing trading for futures prop firms at all that you know of.
Not that I know of, no. All orders have to be closed by the end of the day, and then you just pick it back up tomorrow, which is fine for me because I'm like a scalp or day trader. So that's never been an issue for me. I could care less because I'm in and out of my trades in like 20, 30 minutes. I don't want to have something on overnight.
Yeah, because I mean, from being a prop firm operator, you're looking at doing stuff like this, having been in the space for pretty much almost 3 years now. We understand that the business model is it almost doesn't matter if you're looking at futures versus CFDs versus we have crypto also, and we're actually getting into the future space. That's actually coming very, very soon. So for those of you that are watching this video, by the time this video comes out, we might be like a couple of weeks, 2 weeks away from launching our own futures platform. So it's very, very exciting. It's been something that we've been working on. This is the first time that I'm speaking about it on camera or in public. But we are launching our own futures platform, and we're actually going to be offering it worldwide, which is something that I think a lot of the American futures firms haven't been able to do. But understanding the model and working on product and stuff, like we always understand that this whole prop game is all it is a risk management game as far as like the firm is concerned. Like from the perspective of the firm, it's about managing your risk and understanding how to run your business so that you can keep paying the traders out, right? And one of the things that I think is a hot topic within the prop space is always like, oh, like our firm's A book or B book. From your experience, Evan, like what is the general consensus kind of like in the space? Are a lot of firms predominantly B book? Are firms hedging traders out? Do you have any insight on how firms are operating the risk model on their end?
I mean, I guess like number wise, they're still going to be heavily B booked just because there's so many people not live within the firm. But there could still be a great number of people that are live and A booked with the firm, but there's just way more that aren't, just because of all the people buying the accounts and getting funded with them. But I think it's going to be probably more and more throughout this year and into next. And in the future, you'll see more people getting A booked and pulled up to live, just so that they look like they're trying to actually get people into live and not just trying to get people.
Do they tell you if your trades are going live or if they're B booked? Yeah. So they tell you when
they'll send you an email that they're looking into your trade and that they're impressed by your trading. They're considering you to moving up to live. If you don't get that, then I think it's just like a benchmark thing of like either maybe 5 payouts on the same account. Like if you kept that account that long and able to take 5 payouts from it, they won't let you take a 6th. They'll just call you up to live. Or it could be maybe a dollar figure that you make, right? It's not like a exact one size fits all. It could be many reasons that someone could have a 20% win rate and get pulled up to live just because of how many payouts they've taken or the dollar amount that they've taken out, just because they don't want to keep paying that person necessarily out of their profits. They'd rather be A booked and they make the money together. So there's no like one size fits all with that. But I think more people are going to get pulled up to live this year, just so it looks like these businesses are trying to get people called up to live and not just wanting to keep people in the simulation phase of like, just keep them over there. We don't care about actually getting real good traders to help us make money. I think like for an image wise, they're going to want to have a lot more pulled up to live, like a successful business. Yeah, we have all these people pulled up to live and they're trading our capital and they're making us money. Like I think that's what they'd rather be saying than we have 90%, 95% people just in sim counts.
Yeah, I think that's actually that kind of transparency I think is pretty good. You don't really hear about it in the CFD space. That's definitely something that, if you are being pulled up to live or if your trades are being sent to market, I think that's probably like a good sign or even like a badge of honor for a trader, I guess. Like I like how my trades getting sent out by the firm to the market, as opposed to like kind of nobody knowing whether their trades are going live or not. I think one of the things I think in the future space, it seems like there may be a little bit more transparency currently. That may also be why like the product is a little bit more popular, and alongside the fact that like there's a lot of American traders. America is a really big market, right? So pretty much everyone's gravitating towards that safe option. But I'm a firm believer that like more transparency within the prop firm space, whether futures, whether it's CFDs, whether it's crypto, it doesn't matter. I think more transparency is always good. Like letting people know exactly what they're getting into, exactly what exactly what's happening to their trades, I think is a positive, net positive for the industry, especially given that like there was such a huge, let's say like this prop firm bear market just a while ago with prop firms collapsing all over the place. I think confidence is what was quite shaken. I mean, it was maybe almost a year ago it kind of started, right? I got a question for James. Do you see yourself, if futures does become available in South Africa, do you see yourself switching over to trading futures? I know we've had conversations where you're more over to like swing trading. He's doing a little bit more swing trading.
Yeah,
what's your take over here?
I definitely think if I can trade futures with like a reputable company like Hydra, if you guys allow futures, I definitely see myself trading futures. And maybe I still trade CFDs, but maybe like I swing trade CFDs on the side where I'm managing them like literally like once a day type vibe CFDs, but I'm day trading and scalping futures because it just makes a lot more sense. Scalping CFDs can be a little bit more expensive than futures, so that's probably another aspect. But yes, if futures become available for me as a South African, 100%, I'll probably see myself trading futures as day trading them, and then maybe swing trading CFDs like on as a background thing. That could still make.
So then you mainly be focused on trading like NQ, like the US markets, as opposed
to US markets, maybe DAX, related, right? Maybe DAX, NQ, ES. That's what I'll trade futures on, and then I'd swing trade my CFD accounts in the background. Yeah.
I think for me, like I never really looked into doing futures or futures firms or anything like that because number one, I'm not American. Number two, I've pretty much my main trades come from gold as well as currencies. So I do trade NQ and stuff. Sometimes I'm swing trading. So sometimes there are trades on like trade setups on S&P and NQ, but it's like a very, very insignificant portion of my trades. Whereas majority, I would say like 90, 92, 95% plus of my trades are based on currencies. So that there's a reason why like I never really explored that side of things, especially swing trading and then trading currencies. There's like absolutely no reason for me to look into doing futures. And I never really looked into it until like our team started developing the futures product and we started looking into like the parameters and stuff. Even then, like I'm not part of the technical team that's developing product. I'm not part of the risk team, right? Like that we work closely with our technology partners who are, very, very hands-on in providing, like we just let them know, hey, this is something we're interested in exploring. Like, let's figure out how we're going to do this. And like, I never really looked very, very deeply into that. So Evan, I really appreciate you coming on the pod today, giving us some insight, talking about futures. Obviously you're a huge fan, and you're very happy since you've moved over to futures. And I think there are definitely some very, very strong benefits or differences between futures trading, especially if you're a trader that's day trading, the US markets. I think there is clearly a better product. Like even though right now we don't have futures, like we have CFDs, we offer NQ and stuff. I don't think I can possibly say that, oh, like if you're day trading right now, CFDs, NQ, S&P at Hydra, that it's a better trading environment than futures. It's just, there's no way, right? Like it's just from what I'm hearing, execution, stuff like latency, spread is again a huge one, right? Scalpers, if you have the smaller your stop losses, the more spread matters. And if there's no spread and your trade's going to go straight into profit, that's already, I feel like that already would be a reason enough for me if I was day trading to just switch over to futures. Like forget the parameters of the whatever and the drawdown and the whatever, like just the spread alone. If I was scalping, because I have scalped in my life, like, but mostly currencies. If you told me like there was no spread, there was something that was offering no spread, I would be there the next day. Because it really matters a lot.
I'd say that there is a lot of commissions and fees on the micros. If you trade the micros like real quick, real scalpy, you'll rack up a lot of fees. You made $100, but you paid 90 in fees without even knowing it.
So I guess the the brokers or the market makers are kind of making money more off the fees rather than say like a difference in price. And
yeah, maybe. Yeah, probably because the micros are a lot more expensive than the minis. Just the amount of money you'll get in fees from taking a lot of micro trades today, particularly scalping. I remember there was a day where like my TradeZilla or something said I was up like 250. I'm like, I'm up like 125. That's not right at all.
Yeah.
I'm like, let me go check. And like my fees were like 125 as well. It's like, good lord.
crazy.
Yeah. So you definitely want to keep an eye on that. But
So the micros are just like much smaller, like 10
yeah,
times smaller,
it's a tenth,
something in
yeah,
terms
it's a tenth of the
volume.
size of the minis. Yeah.
Okay. And you're currently more trading minis. So would you say like minis are more worth trading than micros? Is it like, is the fees a smaller percentage or how does it work?
No, I would definitely say everyone should be on micros. It's just a lot safer for the you need big accounts for minis of like it's $50 a point on ES. So it could really rack up quickly if you have a 20-point stop and 2 minis on, you're risking $2,000, which that's like the max you could lose on all these accounts, on these prop accounts. I'm still mostly on minis as micros as well. It really depends on stop loss placement and the low volatility of that day. Or if it's like a 5-point stop, I could afford to go on minis, but if it's like 16, 17 or whatever, I don't want to. I'd rather do 10 micros than 1 mini just so I can maybe piece myself out and not be full in or full out of the trade. I can take size off.
And do you have to, like, you can't partial close? It has to be like you close out the full contract?
No, you can't close half of a mini. It's only full contract. So if you have 2
Right, so
minis on, you could take 1 off.
Yeah.
But like I can't if I have 15 micros on, I could take like 7 off and still have 8 running. But like you're either in that full 1 mini or you can't take off a half. So
Okay, I get it. Yeah,
but instead
I
of
didn't
2
even know that.
minis,
Like,
it's too expensive. 2 minis is too expensive. 1 is just okay, but you can't go like in the middle of it. So you just go to micros. Because I think it's a lot safer. I mean, if you throw on 4 minis on ES, you'd be moving $200 a point. So you could easily get wiped out of your trade before it even hits your stops because you're way
that's 1 point. Yeah.
Yeah, so I definitely say stick to the micros if you're trying to take payouts.
Cool. Gotcha. I know we're running on a tight schedule today, so I don't want to keep you for too long, Evan. I really want to thank you for joining us here today and talking to us a little bit about futures. Want to let you guys know, for those of you that are watching, futures is coming to Hydra. We are launching our own futures product, most likely in the first week of April or towards the end of March. We are finalizing all the things that we're doing over here. We really want to be able to have everything in house. We already have crypto, we have Forex CFDs, and now we're getting into the future space as well. And we're consistently looking to expand our product pool. So maybe once we have futures launched, Evan, I can ship an account over your way and get some feedback from you on the trading conditions and stuff. Is from someone that's had a lot of experience. I would really love feedback on every trade.
You can only do that if you allow South Africans.
I can't comment specifically on South Africans right now, but I have a feeling that you're going to be very happy when we launch our
No. I'm looking forward to it.
All right, I appreciate both of you guys for joining us on the pod today. I hope this was a good episode for you guys. Maybe considering switching over to futures, or maybe wanting to know more about futures, because I myself was not very knowledgeable on the product, and it's always great to speak to somebody that has a lot of experience and has traded both sides. So thank you once again, Evan. Really appreciate you guys for being here, and appreciate you viewers for tuning into today's episode. We hope it was a good one, and we'll catch you on the next one. Peace.